What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is March 14th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we're not only going to be diving in through cryptocurrency markets, taking a look at Bitcoin, Ethereum, and a variety of altcoins to get a real status on where cryptocurrency markets are. But along with that as well, we're going to be spending some time to dive into a real macro analysis of what's been going on with the coronavirus or COVID-19. And yes, as you can probably tell, I can name it now because YouTube has stopped demonetizing or deplatforming people talking about it. So we finally can talk about the craziness that's going on, and we don't have to censor ourselves for it, right, guys? Anyways, I digress. We've got a lot of interesting things to talk about. And then at the end of the video, we have a sponsored interview with Ryan from Energy to talk about the updates of Energy 3.0, which recently launched. So I'm excited to talk about that later on in the video, but let's go ahead and dive into the market analysis. So we can see here not only are the leading cryptocurrencies in the red, but outside of a few exceptions here, the vast majority of the market right now tailoring a little bit to the downside here. We're also seeing as well DAI coming back into reality. A lot of the stable coins were trading at 108 or 109 because there's such a demand for dollar-based liquidity during the sell-off. But we can see here right now things are coming back into rational levels. Bitcoin, Ethereum have all rebounded here over the last, say, 48, 72 hours from the lows. So nothing too much to fret about in this case. We are getting a tad bit of a pullback on the 24-hour though, and we can see that here on the chart here, right? We faded off a little bit of the gains here in the short term, but much better than being down at, for example, $87 on Ethereum, right? And not to mention as well, focusing in on Bitcoin, again, huge rebound here from 3,900 all the way up to the upper $5,000 range here at the peak, still holding well above that 5,000 here. And so long as we hold above, say, 5,200 here, and you keep setting higher lows, I'm going to be really confident here as we kind of wedge in the price here. And this is, again, what people usually tend to watch for when you have these kind of sell-offs here. We wait to see when that catalyst moment's going to come in, when the lows and the highs are closing in, and we get some kind of sudden move to the upside or downside. It doesn't always happen. Sometimes price will just push on through to the side, and it takes a little while for markets to actually pick up direction. But I think in this case, we're going to be picking up here at least in the next few days, guys, because again, at these levels, the risk to reward here for a lot of traders is probably favoring the reward side, right? I'm not saying that it's a guaranteed buy or anything like that, guys. We have certainly seen a lot of sell side action. But if we take a look at the ScalpX index, we haven't been this much on the fear side of things since all the way back in August of 2019. And before that, we haven't recorded something so low on the index, even during this sell-off period back here, right? So again, it speaks to the kind of sheer, kind of irrational fear in the price. And I think this, again, doesn't speak to the broader market's perspective. I think many people are excited and anticipating 2020 and 2021. The issue is here that, again, we had a lot of factors coming into play that really led to this domino effect sell-off in crypto markets. A lack of spot exchange liquidity, with most liquidity being on derivatives platforms where people are basically trading with too much margin and inevitably getting liquidated. We also had the Plus token Ponzi scheme that has been moving their funds over months to prepare for this moment where they would just start liquidating on any exchange platform that would allow them to sell. And along with that as well, we have to be fair in understanding that there is probably a little bit of a cash squeeze here with the coronavirus. But all in all, we've come back here from really taking down about half of the losses we had back here from the night of the 12th here. Or really the day of the 12th, because it was early in the day we started having the sell-off. But and it was a crazy day. I think all of us, no matter where we were, will remember where we were when that happened and look back on it. But again, what are we doing when there's extreme fear? I think you guys know the famous Warren Buffett quote. I hate to be so generic using Warren Buffett, but it's true. I mean, it's a very good sentiment on markets where you buy into fear rather than being fearful and selling, right? So anyways, in the sense of crypto markets, I do want to say that there's not too much going on. I know I jumped over to the coronavirus slide by accident. If you take a look here at like all of our different plays, like Kyber Network, for example, holding up in its Bitcoin comparative towards the highs. We also have REN coming back, still holding up a decent amount, not as much as I'd like to see. Chainlink as well, still holding above basically the ascending triangle here. So long as it does this, guys, I'm still very much in the green in the comparison to my Bitcoin positions, so I'm not fretting too much about this, right? In the sense of some like cheap plays across the board, like Litecoin, for example, came down to our Litecoin ratio chart here. This is basically where this is the general entry zone that I would get in, and also the exit zone. It's a 3x in Bitcoin's compared to Bitcoin in this case, if you actually play it out. through this entire cycle. So again, no guarantee we'll get that, but we've historically had it happen multiple times during previous altcoin cycles. All right. Now I want to go ahead here and talk a little bit about COVID-19 and talk about the developments around this virus. So luckily, I just got out of New York, actually. I mean, the sense of panic around New York City was crazy when I was there. You couldn't help but just overhear people walking across the streets just talking about, the news. And there was rumors going around that New York City was going to lock down. And I almost bought into it. I was a little bit concerned for a little while, but it turned out that it was a lot of FUD. It was a lot of rumors going around. And, well, when you're in a city, rumors can spread. But I digress. The major point here that we want to take a look at is the exponential growth that's been going on and the late response we've seen from international governments in dealing with this when they should have taken very stark positions. This isn't just the United States. I'm talking about the whole global economy. We should have taken a stand where for about 2 or 3 weeks we would have grounded flights. We should have taken extreme precautions early on. We're now finally making those steps later on as it's already spread internationally across a variety of countries. So a little too late to the party in the sense of really addressing this and realizing that this is a pandemic of some sort. Now, the good news here, guys, is that I don't feel, again, at the end of the day, as much as it's sad to see the growth in the death rate here, this is not as bad as people are making it out to be in the sense of, a health concern in this case. The real concern here is that this is going to stunt the global economy by far. And we've seen that over the past few weeks in equity markets, and we're also going to start seeing it in the real world. And it's going to be through a lot of different signs, whether it be for example, physical things that are going on in the real world, stores closing, people getting laid off, and then also through financial indicators, through, for example, the performance of stocks or the yields on certain types of assets, showcasing people feeling that an asset is more risky, basically meaning that the underlying fundamentals are coming to roost. A lot of different things going on here. So let's just go ahead and first start off with some of those surface level things. So, for example, Bloomberg put out an article here. We've been seeing not only in Spain a huge case surge here alongside a lot of the areas in Europe with a large retiring population. Again, and that sadly is going to mean a larger death rate as well. But along with that as well, Apple shutting down its stores as well. And the U.S. finally passing a plan here to some degree in order to combat the coronavirus. Along with this as well, the key thing to take in mind here in the sense of taking a look at traditional markets is understanding how bad we've had it recently, but also what the recent rebound might tell us as well. So we had a really good rebound the other day in the sense of stocks kind of correlating with the announcement of some form of response in the United States. And then also, as well, a ton of different efforts from world governments, from stimulus to central bank monetary policy, that might be able to at least offset some of the pain here. But the interesting thing is that if we take a look back, not only did we have one of the best roaring rebounds in equities in a very long period of time, it was the best rebound we had since October of 2008. So what does this tell us? I mean, I think more than anything, it's just another confirming indicator that we're entering into a recession, right? Again, we're seeing this kind of similarity of dramatic volatility increase, dramatic sell-off, and of course you're going to get dramatic rebounds with it, right? I'm not saying, I think it's, again, guys, I don't really per se want the stock market to crash. I'm just analyzing in this case. I'm just saying, quite frankly, if we see those kind of similarities, don't get caught up in the simple rebounds. Don't feel like you need to FOMO in just because something's rebounded 6% after dropping, nearly 25, 30%. It depends on what index you're looking at. But this is what commonly happens. You have increased volatility. Volatility can go both ways, right? So anyways, just want to make that clear here that we're seeing very, very interesting price action. A lot of correlation to 1929 in the sense of the sell-off. Now, one thing I wanted to talk about here, this is very interesting. This was a comparison on LMTR where they showcased the spread, in this case, between the yield on high-yield CDX, which is basically credit default. It's a credit default index. And along with that as well, with treasuries. So you can see here that the spread here has grown much, much larger here. And we can see that this is similar to what we saw back during the fearful period during the summer of 2015 and back here during 2012 when there was a lot of growing fears in 2011, 2012, post-recession. And look at the crazy spike we've seen here, guys, going from less than 300 all the way up nearly to 600 points. So again, very, very interesting chart here. Along with that as well, one thing to keep in mind here, to my point here, what I was discussing about these kind of rebounds, you'll see, the one thing to note is that with these rebounds, you always have to be fearful of bear traps. Okay, now bear in mind, all of what we've been seeing happen, guys, has been in a very, very short period of time, right? The sell-off has been dramatic. I mean, this is faster from what I can see than what we had back in 2007 and 2008, right? This is very, very dramatic downward pressure. And you can see, like we had compared, for example, the previous sell-off back here where we had a very drawn-out multi-month 20% downturn, a 14% rebound, and then the recession hitting. And then here as well, back in 2000, 19% decline, 10% increase, and then the real sell-off begins afterwards. And then as we continue here, another example back in the 60s, right? So they just go on and on explaining this. They even use, for example, back in the 30s, and also I think they have, 87 as well, right? Back in 87 when we had Black Monday. So again, the major thing here to keep in mind as we go ahead and we take a look towards history is to understand that until we likely get a 50% pullback, we haven't really seen the full effect of a recession. And the one thing that I've always emphasized here in the sense of charts, right? If we take a look at the NASDAQ, for example, right? We've been there about a 27% correction full through. This isn't very different from back what we saw here back in October of 2018. But I want to go ahead and we'll turn off the drawings here. Where do you think a 50% correction would lead? It's pretty simple math here, guys. We basically generally topped out around 10,000, basically double of the highs of the NASDAQ. I think what we would likely get in a full-scale correction is coming down here to 5,000, right? On the logarithmic chart, that's not crazy to think that we would go down there. In fact, that's actually not too big of a correction. It's relatively normal and historic to go down 50%. We've also as well not only had this as resistance, meaning we can make it support, but along that as well, we can make this area of price action that we had back here during the 2015 pullback during August support as well, right? So there's no other significant level on this chart that makes me more confident of where the NASDAQ could go, as well as things like, for example, the Dow Jones. Very similar case scenario here, right? We went up here towards around 29,000. Wouldn't be surprising to see if we roughly take it at about a 30,000 top, just to even it off, that we get somewhere around here, around 15,000 between the previous support here and also previous resistance back here at 14,000. That would make really good sense to me. And it's not terrible. I mean, it's understandable that something like this would happen, right? And then the other thing as well, I guess we'll take a look at S&P 500. Again, very similar case scenario here. General top here around 3,400, right? In this case, we're looking for somewhere around 1,700, and that leads us again very similar to the Dow Jones between the previous support range here before the continued rally and also historical resistance here, right? So somewhere in between that ballpark between the support and resistance. So I think that again, keeping our time frame in mind here, seeing the sell-off here is the beginning of something much larger. I think that's the important thing that's going to make a lot of people successful traders, or the lack of understanding it is going to lead a lot of people to losing out on getting in too early to these opportunities and then eventually selling off when it's actually the time to start getting bullish. One thing that I wanted to do here is just highlight again the significance of this sell-off, guys. We're seeing large companies, for example, like Boeing, down nearly 35% in 1 week. One of the worst performances we've seen across the board since 1987. There was a lot of people calling for a form of Black Monday in markets, and I think we finally got it. The sad thing is I don't think this is going to be the end of this entire case, right? I know I'm confident now that we've entered into some form of recession because central banks can keep tossing money at the system, guys. But the consumer right now, outside of those who are going to stores and buying things to kind of prepare for the next few weeks, the consumer is not strong. I can tell you I have connections, for example, who work a lot in the restaurant business, for example. And some stores in areas like California are seeing sales down as much as 70-80%. Imagine for a moment, everything was going fine. Your business is doing well. You're hiring people. You're increasing wages. And now 80% of your business on a weekly basis is gone. Your business operates on highly thin margins. And it's just gone like that. Another thing as well, not only are we seeing this performance in indices and individual stocks, but we're seeing it in the Baltic Dry Index. This is showcasing us the general cost, in this case, to ship goods across the world. It shows a good sense of demand and basically sometimes a glutton supply as well, leading to lower prices. And we can see we had this as a precursor all the way back here in December and January. The trend was very clear. It was showcasing that global imports and exports were getting frozen. And this had to do a lot with the developments going on in China. Outside of that as well, this is the real sad part, guys. And just as a sense of relatability here, the sad thing is jobless claims have yet to show here on the chart, but they're going to show very soon. And this is why I don't champion or I don't get excited about a recession. Like, I don't care to buy stocks cheap. I mean, that's an investment opportunity, sure, but it's like I don't care about that. Like, this is the real sad reality, guys. In the next couple of weeks, we're going to see a big spike in jobless claims, and the service industry and manufacturing and production. There's going to be a very, very big hard hit here for a lot of businesses if we can't come up with some solution here in the short term to help them to some degree. And I don't know if that's really just a bailout for specific corporations. I don't know if it means a handout for everyday Americans or tax cuts or monetary stimulus. I don't really know what it is, right? You know, sometimes these things just happen, and sometimes there's not much you can do about it, because when the system freezes, a lot of dominoes start to fall. And it's a very, very sad reality with all this. So all in all, guys, the major thing I would say to do during this time is to not be, don't be too easygoing with spending in this case. Make sure to be prepared if things were to go south even further. And, just keep on your toes in this case. That's the major thing I'm doing right now. I'm not really worrying so much about the health ramifications, because I have a very, even though I went to New York, right, I'm keeping to myself. I'm self-quarantining to a certain degree because I was in a pretty high-risk area. But all in all, the major thing that I'm doing here is just keeping prepared. I'm keeping up to date with the research. I'm not getting emotional about it, but at the same time, being prepared is nothing. There's nothing wrong with being prepared in that case. Anyways, I'm probably rambling on a little bit, guys. I hope you are having a great day wherever you are. And let's go ahead and dive into this interview with Ryan from Energy. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Ryan Lucchese, who is the president of Energy. After we left off with our conversation with Tommy back a couple of months ago, I'm really interested to see where Energy 3.0 is going. And what better person to have on here than the president himself, and that is Ryan. So Ryan, thank you for making the time, man. It's a pleasure to finally get to meet face to face, and it's going to be interesting to hear a little bit about what you guys are doing with Energy 3.0.
Yeah, thanks for having me on. It's great to be here, and we've done some great videos on energy in the past, so I'm happy to be here and talk about where we're headed now.
Absolutely, man. I talked about with Tommy last time. It was a really awesome opportunity. We had a good conversation, and it's just amazing. Between both Tommy and I being YouTubers, we kind of see the shared vision of energy, because it's a combination of some of the best protocols out there: Ethereum, the kind of vision of smart contracts and dApps, what's been going on in the Dash ecosystem. So I think it's a great combination of all the working pieces. And as you guys are moving towards Energy 3.0, I think this is going to be a real culmination of that vision that Tommy and you guys have shared for a very long time. So just to kind of give people a little bit of a brief overview, what is Energy kind of all about, and also what is Energy 3.0 going to entail, or what kind of differences is it going to bring?
Yeah, I'm super excited about Energy 3.0. So we launched Energy in April of 2018. It was a proof of work coin when we launched it. That was kind of our Energy Gen 1. We hard forked over to proof of stake in 2019. That was Energy Gen 2. And now we're moving to Energy Gen 3, which is our smart contract platform. Really at the core, Energy is about decentralized governance. We have the strongest treasury in the space. So what we've done is, through careful design of the coin economics, we've built a really powerful self-funding mechanism. And that's allowed us to get where we're going today and to even better places in the future.
Absolutely, man. Yeah, I think the vision of taking the treasury model that has worked so successful on Dash, but I'm surprised too as well. Not many projects, even big protocols like Ethereum or Bitcoin, haven't really taken into account. But also taking, again, the kind of smart contract capabilities, the expansion of the DeFi ecosystem, which I'm excited to ask you about later on in the video. But all these different things, I think, together in combination can build a really powerful protocol. And in a space where there's a lot of noise, I think Energy really stands out with those features.
Thank you. Yeah, that's what we're looking for. Is we're looking for what are the strongest features in the crypto space. We started with the treasury because funding is the right place to start, right? It allowed us to build a team. It allowed us to build a community. We did an earn drop program where we gave out 3.8 million energy valued at over $6 million. We got a huge community built up out of that. It was really enthusiastic, excited community. So
And I gotta say, you did it all without an ICO, man. Congrats! That's the thing. I think it's so cool. Every element that you guys really thought of, I think, in the sense of the airdrop, an equal distribution initially amongst people who are going to get out there and talk about the energy vision and the energy ecosystem. It builds such a value proposition, and not to mention as well, just skipping again all the regulatory hurdles and stuff with an ICO. You guys know that you are a democratized currency in this case. It's open to everyone. So I want to go ahead and talk a little bit deeper in the sense of Energy 3.0. So I know you guys are moving to this vision. You guys are adding a lot of the kind of code framework that was kind of common in Ethereum, so people could build Solidity based contracts on the Energy network, if I'm correct. So what is this transition going to look like for people who either hold Energy or maybe are participating in the Energy ecosystem in some way?
Yeah, it's really cool, actually. I'm not aware of any other coin that has done this in the way that we've done this. But what we've done essentially is a decentralized trustless migration from a Bitcoin style blockchain. We originally started our source code based on Dash, and now we're moving onto an Ethereum based platform. And what we're doing with this coin migration is, rather than having a custodial period or where you have to send your token somewhere, like a lot of other token swaps or coin migration type of things have been in the past, we've implemented essentially just the key signing from Bitcoin on Ethereum. So you can take your keys from current generation of Energy and sign a transaction on Gen 2, and there's your balance. It's really cool. We have actually several ways to do it. There's going to be Energy Nexus, which is a client-side web application, kind of like my Ether wallet or something. Runs in the browser locally. You never send your private keys anywhere. That's capable of doing it. It can be done from the Gen 3 full node, of course, and it actually can also be done from the Gen 2 full node, which is really cool. So there's a lot of great options for users to migrate their coins, and there's because it is this trustless, decentralized system, there's no time limit on it. If anyone's holding Energy out there, they come back 3 years later, they forgot about it. That's not going to be a problem, unlike some systems that have had a limited time period.
I like that, man. So to put it simple, it's almost kind of like you're switching over from one bank account to another in this case, and all you have to simply provide is that signature, at least in one of the examples you mentioned. So it's pretty fascinating, because that's the thing, is usually when people do token swaps, or they do some kind of move onto another chain or some big major mainnet move, the big issue is that in many cases that they have to go through some colluded process. It usually takes a ton of KYC, all these kind of steps and everything to get through. But in this case, it's just a simple transmission with the signature.
Exactly. It's way safer. There's no time limit on it. There's no third-party involvement. You keep your private keys private, and off you go.
Awesome, man. Well, I got to say, to be personally honest, I love all of the features that you guys offer on chain and everything, but I know a lot of people as well are interested in the base kind of core economic side of things when it comes to Energy, and that's with the staking and master nodes that you guys offer. So when it comes to Energy 3.0, is there going to be any changes to people who are staking at the moment, people who are running master nodes? Maybe as you alluded to in this case, as you guys are moving to the new chain, even though I might be able to hold my Energy in maybe a previous existing wallet on the previous framework that was based around Bitcoin, am I still going to be able to stake there as well?
So our Gen 2 chain will eventually come to a halt. So the moving over to the Gen 3 chain is required to run master nodes or staking. Totally different blockchain, totally different blocks and transaction style and everything like that, right? So moving over is required to continue staking or participating in the network with master nodes or anything like that. But there are some cool changes. Master nodes are way easier to set up on Gen 3, so that's awesome. And another great thing about it is we're moving towards actually a reduction in masternode collateral. So this is huge news. We have at Energy, we've always been a very community-focused coin. Like we were talking about earlier, we did this huge distribution early on with the earn drop. We had a fair launch, no ICO, no pre-mine, nothing like that. It was just trying to get as much energy out into as many people's hands as possible. And part of that vision, ultimately, I think will include this masternode collateral change. So we'll be reducing the collateral from 10,000 energy to run a masternode down to 1,000 energy. So
wow.
Yes. So that's really, really big news. along with that, the master nodes in Gen 3 are actually multi-collateral master nodes, which makes them way easier to run. So what that means essentially is, imagine a situation, you're in Gen 2, you're running a master node and you're waiting for master node rewards to accrue so you can get your next master node set up. Well, in Gen 3, because the rewards will be the collateral will be 1/10 as much, and because they're multi-collateral, instead of waiting a year and then having to set up a new server for your master nodes, it's like every couple of months or something, however it works out timeline-wise, to get a new 1,000 energy, and then bam, your master node is stronger in terms of collateral.
That's incredible, man. I think the reduction down to 1,000 democratizes it a bit more for more average everyday people and stuff comparative to the current 10,000 restriction. I mean, there's a good amount of master nodes already running, but this will, I think, broaden the decentralization and the security of the network. I think similar to what we saw in the sense of Dash and stuff, the more master nodes are in this case with collateral backing and reaching consensus, there's a good sense of security boost that you get from that.
Absolutely. It's a really positive change. I think it's going to be opening up the masternode participation to more people, as you mentioned. And with that, we get some of the stronger masternode network and more decentralization ultimately. So we get better governance, better security, all the features that masternodes are able to provide, scalability even, will all become stronger as a result.
Absolutely, man. Well, there's a lot of big changes, I think, in the sense of the fundamental structure here. And I think, honestly, with Energy 3.0, the biggest is going to be kind of the taking on of the Solidity smart contract framework and DApp framework for what's been built on Ethereum so far. And I'm really interested to ask you, Ryan, what's your kind of focus right now on what you want to see built or brought over? I understand it's basically anything goes in this case for Energy, but what areas do you think Energy is really going to be kind of a killer platform for these applications to migrate over? I'm interested maybe to get your take on like the DeFi movement, for example, which has caught my interest to no avail.
I absolutely love DeFi. I'm looking forward to having more DeFi projects on Energy. Because we are Ethereum compatible, a lot of what's been built out there already can just come right over. In some cases, it'll take, a little bit of modification, especially around oracles. Like if something needs the price of Ethereum, it might be asking for the price of Energy on our platform. But aside from that, extremely minimal modification to what's already been built on Ethereum. There's so many cool things that have been built out there that we can start to bring over. And, just imagining if Ethereum had this Treasury model. I know it's been a topic of discussion among the Ethereum groups that how to get funding going in the future. And, that's something we really looked at for the long term in Energy. We've built in this funding model with the decentralized governance in the Treasury, and having that power to kind of bring over some of this DeFi stuff as well. There's options for like governance as a service, which can really expand the capabilities of some of these DeFi platforms.
Yeah, there's a lot of things like Gitcoin that have been trying to support open source development for a lot of DeFi projects that remain open source. But I think the problem is, as you said, Ryan, you have to think about it structurally on your network. If there isn't an incentive in the long term for people to build these open source projects, I think you're not going to see Ethereum in the long term be that protocol where this stuff happens. And again, I say that as being really bullish on Ethereum this year because of DeFi, but I don't see the kind of fostering and support for DeFi that I think really would come with an integrated core protocol feature where some of the rewards go to like incubation programs that support these projects and constantly provide them funding, saying, look, don't worry about raising capital or doing some ICO. Just build what you're building. We'll help fuel it so long as you're building value in our ecosystem. It seems so simple, but it's something so valuable at the end of the day.
It's huge, right? I mean, and this is the open source community has been down this road a couple of times already. I mean, we've seen Linux is a really good example. In the early days of Linux, it was volunteers and enthusiasts and people building and innovating and making this great new operating system, and getting actual business on board and funding on board. And now you've got IBM and Red Hat and all of these major organizations that are providing really strong backing to keep that going. And that's what's needed in the crypto space, getting the development moving ahead at a way that is stable and modern and really focused on the long-term vision is absolutely needed. And that's what's going to proliferate DeFi and lead to just this huge explosion in financial innovation, I think.
Yeah, man. The reason why I was really excited about this vision when I talked to Tommy originally was it sounded so much in line with what you guys are doing with your exchange platform that you want to build within the energy ecosystem as well. Just that kind of unstoppable, decentralized platform to trade any asset and try to reducing the cost and the scale of transactions as well, I think is a really exciting vision. And speaking of that, Ryan, in the sense of Energy 3.0 and just kind of 2020, 2021, we know these are going to be 2 big years for cryptocurrencies as we enter into the next cycle. What's the vision here for you guys in the sense of like crypto, not just cryptocurrency markets, but specifically energy? Where do you really see yourself going over the next couple of months? And what are some of the big milestones you guys are aiming to achieve?
Yeah, the Gen 3 launch is obviously the thing that's really coming up. We have that coming very soon. So that should be our immediate focus at the moment. After that, we'll be shifting our focus over towards building EnergyX. The exchange you're talking about is a zero commission exchange. And really, once we have EnergyX built, we really have all of the most important pieces of a cryptocurrency business, right? We've got smart contracts, we've got governance, we've got an exchange, we've got kind of everything at that point, right? Now, that's not to say we're going to stop there. That's just the foundation. That's having a really solid base that we have the foundation that now we can start building the actual house on, right? And the house is end user products, DeFi applications, financial instruments that are innovative, new, creative, and ultimately open and more accessible to the people of the world than what's out there today.
Absolutely, man. I think that's the next step for DeFi is we've gotten a lot of really good use cases coming out, but I think the real value here is going to be when someone in the Philippines who's got a smartphone and is living off of $15 a day, if anything, is able to download this application and get the same interest earning opportunities, the same exchange service opportunities, and the same payment opportunities that we're seeing in DeFi. I mean, that's going to be the real game changer here is when people can do that on any mobile device across the world. So it's really democratized to as many people as possible. And it's kind of speaking about that democratization of opportunity, Ryan. In the sense of energy, I know you guys did the earn drop campaigns, which was really great, but I know a lot of people are maybe curious, is there ways to earn energy in some ways? Is there ways to get more engaged with the community? Because I think that's what people are always looking to do with projects that they agree with in the sense of their vision. Is there any opportunities like that right now? Yeah,
definitely. We have ongoing, pretty much 24/7, our Discord Rain channel, which is a pretty exciting place. That's where essentially we have a bot on Discord that is raining energy to people who are participating in conversation and everything. And it's just a really high energy environment where there's a lot of excitement and stuff going around. So anyone can join our Discord and get some free energy like immediately, basically, with that. And then, we also are always active on social media, our Twitter. We do giveaways and stuff there as well. So there's some opportunities to get involved in that way. And then, of course, the staking, the master nodes, and all of that kind of stuff is a great way to participate in the network and kind of help the overall growth of energy.
Yeah, to build on that, Ryan, it's similar to like one thing that I really liked about Dash is there's like a few websites where you can apply and basically put a proposal in, a Dash proposal in this case, to raise funds. Do you guys have something like that for energy where people could propose something or maybe want to run a marketing campaign or build some kind of application on top of it after Energy 3.0?
Yeah, absolutely. So we have essentially the same system as Dash currently on our Gen 2 energy, where anyone can come in and submit a proposal. This is our decentralized governance mechanism, and that's the way that the Treasury works. We have essentially 400,000 energy per month that is allocated to being able to fill out these proposals. And so the way that that works is that anyone comes in, submits a proposal. There's a 100 energy fee for it, and that's mostly to keep spam down and everything, so we don't get just flooded with proposals. But anyone comes in, submits a proposal, it goes out to the masternode network, and the masternodes then ultimately vote on what they think is going to be the most favorable for energy. So we've had some neat things funded this way. Of course, there's the work of Energy Core, which is essentially a business and service of the Energy DAO. So the masternodes vote on proposals that Energy Core fills out. We had a educational video series that someone made called Cryptocurrency Learning with Energy, I think it is. It's on our YouTube channel. So for anyone who's new to crypto, that's like the first place that I send them, because it's really a great just introduction to cryptocurrency as a whole, and understanding what cryptocurrency is. So yeah, that's our decentralized governance mechanism, and that's how it all works.
Yeah, man, it's already been working ever since the early days, because you mentioned that YouTube video series. I got to say, man, it's probably one of the better ones I've seen. And I like how, again, you guys took the time throughout that to not only just explain about energy and the focus of energy, but also the broader cryptocurrency ecosystem, the history of it. Mm-hmm. It was so well explained comparative to a lot of the education material. And I'll say that as a YouTuber, like, who's been doing that for the last few years, it was really good to see. And to see a project actually dedicating some time, and in this case, a little bit of the money from the ecosystem to do stuff like that. So I think it's a big reason why energy is very community oriented. It's a good telltale sign that you guys are onto something for the long term. So in this case, Ryan, if people want to get involved in the community a little bit more, what are some ways they can do that outside of just maybe the Treasury? Maybe there's some key places they can go to. I know you mentioned the Discord, maybe the website.
Yeah, absolutely. Our website is energy.world, www.energy.world. That's got a ton of information that kind of goes out to everywhere. Once we're on Gen 3, we will have gen3.energy.network. That's our energy nexus, which is sort of a front end for Energy Gen 3. It's got masternode features. It's got coin migration features. It's got some of the stuff that you might want to do without running a full node, but here's a client-based web front end that can do it. So that's a great place. And the Discord is really probably... there's just a ton of activity going on there. There's a lot of great people that have joined our community. I'm super grateful for that. Thanks to our Earn Drop program, kind of kicked off a really strong community building effort. So the Discord is just full of people asking great questions and participating and trying to understand better various pieces of the system and that kind of stuff. So that's a great place to start.
Good stuff, man. Yeah, I've been on the Discord before. The people there have been a huge help, and I'm excited to see more people join in on the efforts that you guys have, the shared vision of energy. So if you guys are interested, I'll leave a few links down below where you guys can get engaged with the energy ecosystem from their Discord, to finding more information on their website. Ryan, man, this has been a great conversation, man. I honestly think it's a good summary of what you guys are aiming to achieve. I'm excited to see 3.0 materialize and just kind of see it in action. I think energy alone has already been pretty exciting, but I think this is yet another big major milestone for you guys, and I can't wait to see what you guys have planned afterwards and what people build on top of energy now that it's a programmable chain where people can deploy smart contracts and dApps. I mean, it really is going to expand like wildfire, I think, over the next 2 years.
Absolutely. And on that point, I have like one last kind of cool feature for Energy Gen 3, and that is that we do have the governance mechanism hooked up to some features of the protocol. So like Tezos, we're able to perform certain upgrades to the protocol without needing a hard fork. This is a tremendous expansion of the role of governance in energy. And ultimately what it means is faster path to development, right? Hard forks are difficult. We've been through one. We hard forked to proof of stake. I know personally well what it takes to pull off a hard fork. Right. It's not easy. Doing it with having a governance mechanism where we can do this is going to accelerate development tremendously by making it easier to develop and to innovate.
Awesome, man. That's really exciting to see. Again, yeah, I think it's another sign that you guys are pulling a lot of working pieces and seeing what works in the space and what doesn't, and just taking all those working pieces and putting it into a protocol that's going to be built for end-to-end users, businesses, developers, the whole entire kind of piece of the pie. So I'm excited, man, to see it come together. Thanks for sharing that, man. And I'm excited to see where you guys go over the next coming months.
Yeah, me too. Thank you.